Hello, everyone, and welcome to this Crypto Valley Association webinar that we are super excited to be hosting for you today. So, what is the Crypto Valley Association? Let me just give you a quick intro while we wait for more people to join. So the CVA is a nonprofit organization which was founded in 2018, and it's Switzerland's biggest professional crypto and blockchain associations, with the goal of increasing collaboration, advocacy, and education in the space. Both Bullish and Circle are proud members of the Crypto Valley Association and part of the Crypto Valley Association's institutional working group, which I co-chair with Eva Lawrence from Figment. So I'm your host today. My name is Denitza Vatchkova, and I'm Director of Business Development at Bullish. Bullish is one of the fastest growing regulated digital asset exchanges. For those who aren't familiar, we are an institutionally focused exchange that launched almost 3 years ago. What's really exciting is that we've hit 775 billion in total trading volume since launch. We have a comprehensive set of products from spot to perpetuals. But anyway, enough about me. I am sitting down today with Patrick Hansen, who's the Director of EU Strategy and Policy Advisor at Circle, who will now introduce himself and tell us a little bit more about Circle before we jump into Q&A. Patrick?
Yeah, thank you so much, Denitza, and thanks to the Crypto Valley Association for the invitation. Really looking forward to spend the next 45 minutes or so talking about the EU's most favorite crypto acronym, which is MiCA. So my name is Patrick. As you mentioned, I lead our EU regulatory strategy over here in the EU. We just celebrated actually quite an exciting milestone in the EU because we announced early July that we had received an e-money institution license from the French supervisory authority, and that we are the first major global issuer to be compliant with MiCA, the big regulatory framework we're going to discuss today. But yeah, more generally, for those who don't know Circle, Circle is the issuer of USDC and EUROC, so-called stablecoins. I think we're going to discuss that today as part of the MiCA topic. And more broadly, Circle is really a global financial technology company that enables companies of all sizes to leverage the power of public blockchains and of digital currencies. But first and foremost, I think Circle is known to be the issuer of USDC, which is the largest regulated stablecoin globally. That's all on me. Denitza, back to you.
Yep. So yeah, stablecoins, which are also known as the crypto killer app, are the hottest topic of the year, and so is MiCA, as you mentioned, the most interesting acronym, which stands for Markets in Crypto Assets Regulation, which kicks in January of next year. So can you tell us, we have a very broad range of people joining us, from crypto experts to crypto enthusiasts to lawyers who know the insides and outs of the EU law, to people who literally know nothing. Can you tell us, can you just give us an overview of MiCA? What is it? How did it come about? And what are the key deadlines that have been passed and the ones that we need to watch out for before we dive into specifically stablecoins and the crypto asset providers?
MiCA is really, I affectionately call it the one regulatory framework to rule them all, because it's, I think, safe to say it's by far the most comprehensive regulation that the crypto asset industry has seen so far on a global stage, actually. And so, I mean, where should I start? Let me maybe start with the history. And I actually had the chance to follow MiCA quite early already. Back in the days, I was working for Bitkom, which, similar to the Crypto Valley Association, is the largest tech association in Germany. And I remember back in the days, that was 2019, I was responding to the EU Commission's consultation about should they, move forward with such a regulatory framework or not. What are, the focus areas of the industry back in the days, and so much has happened, obviously, since. It's been really a multi-year process. But the history of MiCA was really one that was sparked, I would say, primarily by three developments. On one side, in early 2019, actually, the EBA, which is the European Supervisory Banking Authority, published a report that said, listen, these are all types of crypto assets that exist out there. We see a lot of trading, we see a lot of activity, but most of it is not covered by existing EU regulation because they don't represent financial instruments. So they don't really represent, securities in that sense. And so it's unregulated. And that sparked, the conversation, should these activities, ICOs, token offerings, etc., should they be regulated? So that was the first development. The second one was that in the EU anti-money laundering regulation, the so-called AMLD5, for the first time in history, some light touch rules or some rules were introduced for crypto businesses. And that was the AMLD5 entered into application in early 2020. And that's where, for the first time, custodians and exchanges in Europe had to implement at least some AML measures for their crypto businesses. But that AML directive really led to a patchwork of national implementations. So some countries like Germany introduced really heavily regulated licensing regimes for custodians, for example. Others kept it to that AML registrations. And again, others didn't really implement nothing at all. And so we started seeing a divergence in national approaches across the EU. And that was a problem that the EU Commission identified. And then the third, and I would say last big trigger for MiCA was Libra. As you probably all know, especially being in Switzerland, Libra was probably the most ambitious crypto project to date back in the days, and sparked a lot of fear, a lot of political conversation around what that is as a product, as a means of payment, as an asset, and how it should be regulated. And it really accelerated the conversation that was already ongoing about how should these crypto assets and crypto activities be regulated. So I would say these were the major triggers. They led ultimately to the EU Commission moving forward with a proposal for MiCA in 2020. And then, since then, if you look at the timeline, it was proposed in 2020. It was discussed and negotiated in the Parliament and in the Council in the following 2 years. In summer 2022, we saw a political agreement between the major legislative bodies in the EU. That took another while in order to specify that political agreement into actually technical rules. And then in 2023, in summer, it was officially adopted by the European Parliament and the Council as law in the European Union. However, there were some essentially implementing transitional timelines that allowed stablecoin issuers, for example, but also crypto asset companies to prepare for that implementation of that huge framework. And so in 2024, MiCA finally entered into application. For stablecoins, the key date was the 30th of June, 2024. And for all crypto asset service providers, be it custodians, exchanges, the key date is the end of December this year. So that's the time where MiCA will enter into application for most of the crypto businesses in the EU. Although one should say that there are some grandfathering regimes again from national supervisors that allow those companies that already benefit from a national registration or license to have an additional number of months where they can finally receive their MiCA license. These are the major timelines.
And this is going to be my next question before we dive into the hot topic of what happens to those who are not regulated. Can you explain exactly how this regulation works? What's the difference between a directive and the direct regulation? How are different countries tackling those?
Yeah, so in EU law, the difference between a regulation and a directive is that a regulation is directly applicable in all member countries. And so MiCA, the Markets in Crypto Assets Regulation, is therefore directly applicable in every single of the 27 EU member states. There is no real leeway for national countries and national governments to say we deviate from what the EU has decided here in terms of crypto regulation. And so they have to stick to whatever the EU came up with. For directives, it's more, as the name says, a direction. So for example, when it comes to let's say, the e-money directive or the AML directive in the EU, member countries still had some flexibility and some leeway in how they transposed that EU law into national regimes. Some, for example, decided to put on more, I don't know, for example, heavier prudential rules. Others decided to be a little bit more flexible when it comes to reserve obligations or AML obligations, for example. And so the one thing to keep in mind, and I think personally that's one of the huge benefits of MiCA, is that it will really create a level playing field, because there is no way for national governments to deviate from these EU rules.
And what are these grandfathering procedures that exist in some countries?
That is supposed to grant some additional implementing time for companies that have already shown some commitment to regulation. And so the EU decided to grant, or to allow the national countries to grant additional, I would say, implementing time. And that has led, at least on that grandfathering periods, to some divergence between member states, because there was some flexibility as to how much time these member states could actually grant. Although the European supervisory authorities had recommended to every member state to grant 1 year of implementing time, there's still some deviation here. So you have countries like Germany and others that grant 1 year and have really followed the EU guidance. But others, France, for example, has granted up to 18 months of implementing time that allows CASPs to continue to provide the services, given on the condition, obviously, that they already have a national registration or license. They have an additional 18 months before they can receive the MiCA license. And again, other countries have reduced that transition time. So for example, the Netherlands have reduced that grandfathering period to only 6 months, meaning at the very latest in summer 2025, if you provide crypto asset services based in the Netherlands, you need to have a MiCA license. You cannot rely any longer on your local national license.
So then why would at Bullish we took the stance that we're going to go for the highest possible standard? So we are on file with BaFin for a prop trading principle and custody license. But there are a lot of actors in the space who prefer to go to countries where they could get these registrations faster and passport themselves into MiCA. Does it actually really matter where you get licensed? I mean, you guys are licensed in France, which I'm sure was a very thorough process as well. How should we think about this?
I mean, in theory, it doesn't really matter, because the rules are the same and the rules are really based on what the EU has adopted. In practice, there might be some divergence when it comes to supervisory practice, for example. And so that is just, I would say, more a cultural thing. There are some supervisors that put a heavier notion and a heavier focus and scrutiny on some aspects, let's say, whatever, IT and cybersecurity, and others might put a greater weight in the discussion, in the licensing process, into, for example, AML obligations and requirements. But ultimately, those should really be, I would say, notions in divergence. Broadly speaking, it is really one level playing field after the grandfathering period finishes. The only point, Denitza, to your point of seeking the license in Germany and not only going for registration in another country, I think the major difference here to point out is that there is actually a difference whether you're just registered, so to say, as an AML compliant crypto business, or whether you already have a national license. If you already have a national license, you will benefit from what MiCA calls a fast track procedure. So if you're already, let's say, a regulated licensed custodian in Germany or in France, you will be able to upgrade that to a full MiCA license that you can then passport throughout the EU in a fast track, easier process. Whereas if you have a registration for AML purposes, you really have to go through the entire MiCA licensing process from scratch.
And I think that's a very important difference that not a lot people are aware of. But hopefully, as we get closer to the deadline, it's going to become clear. Then another question I had for you is, so the European Securities and Markets Authority, they've delivered an opinion on global crypto firms who use their non-EU execution venues to circumvent the MiCA regulation. What do you have a strong view on that? As in, firm with significant operations in the European Union use their non-European entity to, say, trade or custody assets on another provider using their non-European entity. Do you think that this regulatory arbitrage is going to have some leeway under MiCA, or it's something that's going to be under significant scrutiny?
On that specific point, I mean, I read the ESMA guidance. It doesn't touch us specifically, since we're more of an issuer and less on the CASP side. I think the key piece to really grasp is that since the EU spent so much time now on developing that MiCA regime, since the goal is really to create one harmonized level playing field in the EU, one of the key objectives now when it comes to the implementation and then further down the road, the supervision of the framework, is that regulatory loopholes for arbitrage, etc., are closed. And I think that's part of that objective. And the ESMA guidance really tries to make sure that there is no benefit to gain from not seeking an EU license. And so I think you have to treat that guidance that ESMA published, and potentially also future guidance that will be published by the EBA and ESMA, really you have to see that under that specific light, that there's zero appetite in the EU going forward to see that local, compliant, regulated actors will be disadvantaged because they have heavy compliance and operational costs versus potentially foreign unregulated players that continue to serve the EU market. And so if you look at, for example, even the earlier guidance from ESMA on reverse solicitation, you will soon realize that there aren't too many loopholes left. It's probably the strictest reverse solicitation guidelines that any financial services vertical has ever seen in the EU in history.
I find it quite entertaining that for once we in Europe are leading the way in regulating such an innovative industry, right? We have a very clear framework. Sounds like there's going to be no place to run starting January 1st, 2025. Whereas in the US, for example, they still haven't really gotten their act together. So there's actually this clarity is something to definitely look forward to. So one question on the crypto asset service providers before we dive deep into the stablecoins. So what happens if you are a crypto exchange and you don't have a MiCA license starting January 1st, 2025? I ask this question because I'm actually surprised with how many of our competitors are not even considering getting regulated or licensed in Europe. What's the plan B really for this crowd?
I personally think there is no good plan B, to be frank. If you don't have a MiCA license, it's pretty simple. You will not be able to offer your services in the EU. You will not be able to market your services and products in the EU. And so at the end of the day, especially if you're a European company based in the EU, I think the conclusion will be you have to close shop because you're just a non-compliant player at that stage, and you're not allowed to provide those services. If you're a foreign entity, of course, there is the question, to what extent could you still provide services in reverse solicitation to EU users? But if that's your plan, I'd really recommend you read the ESMA guidance on reverse solicitation, because the flexibility to act under those reverse solicitation guidance is extremely limited. So you can't really communicate, you can't market anything. Even if you onboard users, you have to stick to whatever the user requested and can't offer anything else. You can't really communicate even with that onboarded European user. I personally think that, practically speaking, even foreign players will have a very, very hard time serving EU users from a third country. And I wouldn't be surprised if many foreign companies, in reaction to that super strict reverse solicitation guidance, those foreign companies that choose to be non-compliant in the EU and not seek any MiCA license, I wouldn't be surprised if some of them even went so far as to geo-block the European Union, because otherwise they would run the risk of breaching those reverse solicitation guidelines.
Sure, sure. In theory, that's exactly what they should be doing. Cool. So now moving on to stablecoins, the hot question. Since the deadline has already passed, you are licensed in France, so you're completely fine for both EUROC and USDC. But what happened and what has been going on with the non-regulated stablecoin issuers? Thinking some of your biggest competitor, how are they getting away with it? What's going on?
I think it's similar to what I just highlighted earlier for CASPs. The conclusion is pretty simple. If you're not authorized in the EU to operate under those MiCA rules, you will just no longer be able to serve the EU market and to market your products and services in the EU. And I think we will really see that kicking in once MiCA enters into application for CASPs at the end of the year. Because as one example, EU-regulated trading platforms will no longer be able to list those stablecoins that are not authorized under EU rules. Those stablecoins will not be able to pass any kind of suitability assessments and tests, for example, for EU trading platforms. And so I expect to see quite a significant shift in stablecoin usage and liquidity in the EU, because all the existing activity and liquidity will kind of move over to those stablecoins that are compliant in the EU. And that's part of the reason why we went through that entire process. It's because we see a big market opportunity in the EU. We're trying to position now USDC and EURC as the largest MiCA compliant stablecoins. We're in touch and in conversations with many European players. And we really hope to be able to build those liquidity network effects within European crypto capital markets for our stablecoins.
And are you surprised that liquidity hasn't dried out when that deadline came in on June 1st? Or do you think that the next drop really will be the crypto, the exchanges? So they're going to be under more scrutiny of being regulated themselves, and therefore what stablecoins they list as part of their offering?
I think so, yes. I think so, because ultimately what entered into application at the end of June were Title 3 and Title 4 of MiCA, and those really covered those entities that want to issue and offer stablecoins to the EU public. But once now MiCA fully enters into application and starts to bring all those different exchanges and CASPs into its own scope, I think that's when we will truly see the impact trickling through the entire EU market.
Let's talk about the European stablecoin landscape specifically, because I think it's really interesting how many of these projects you're starting to see pop up. They have pretty much all the same value proposition. They pretty much all have EMI licenses in various jurisdictions. But what do you think is necessary for a European stablecoin to gain critical mass? Obviously, you need to get the exchanges and the market makers behind, and the use case needs to be really strong. But what's the risk of getting a really fragmented market in Europe and not really having a champion at the end of the day? And as someone I know mentioned to me, what if the euro finally finds its use case, as in exchanges, instead of listing these European stablecoins, just decide to list pairs against the euro? And also, if you can talk about the latest developments in EUROC, which I think has the largest cap now among the European stablecoins.
Yeah, it's one of my favorite topics, Denitza. It's the big question is, why haven't we seen more euro stablecoin adoption, right? Because at the end of the day, the euro is by far the second largest currency globally. If you look at traditional metrics like FX markets or foreign currency holdings within financial institutions, for example, usually the euro fluctuates between like 20 and 30% roughly. And if you look at the crypto markets and Euro stablecoin adoption in the crypto markets, the number is tiny in comparison. There is less than 0.5% of global stablecoin market cap is actually euro denominated.
Yeah.
And the question is, why is that, and how will that develop? On the why is that question, I personally think that the major reason is that in the past, the majority of the crypto activity has really been seen in trading and in crypto capital markets. And I think that's where US dollar stablecoins just developed insanely powerful network and liquidity effects, where it didn't really make sense for a user to use a euro because the dollar pairs were more liquid and more accessible, and therefore ultimately more useful. Another reason, I think, was the fact that we had little alternatives. There was the regulatory, the regulatory clarity with MiCA really started this year, right?
Mm-hmm.
Prior to that, there was still ongoing conversations. Could we fit a stablecoin into the e-money framework or not? But starting this year, it's perfectly clear, and we see compliant actors flooding the markets. And that's why I think, and I also hope, and I talked about that, for example, 2 months ago when we launched also at the ECC in Brussels, I think that will change. And I see a few trends why that would change. First of all, there's the trend of what happens with European CASPs. And I think they will have an incentive to also switch to MiCA compliant tokens. So many of those MiCA compliant tokens will be euro denominated. And so I think we will see some growth within crypto capital markets themselves. However, I think the even bigger growth can be expected in those use cases that are less, I would say, trading focused, but more payments and real world utility focused. And so as we see also crypto and blockchain technology being used, for example, in capital markets, so when it comes to trading stocks and bonds on blockchain in tokenized fashion, you will need a fiat settlement leg, right?
Yeah.
And in Europe, as those players launch their use cases, they will use a euro fiat settlement leg. And that will, at least as of today, be a euro stablecoin. So one thing I'm personally looking forward to is the launch of the so-called DLT pilot regimes in the EU that are essentially tokenized trading venues. So trading venues on blockchain for stocks and bonds, etc., settled via stablecoins. In addition to that, I think now with the regulatory clarity, we will see increasingly payments use cases emerge, cross-border payments, be it B2B. We have an interesting pilot project ongoing with SAP in Germany, for example, where they can pay suppliers in EUROC, but also retail payments, cross-border payments, remittance payments. Now that ultimately you have the regulatory clarity, you have the same rights with a stablecoin as you have with e-money, traditional e-money, so to say. I think we will see less and less hesitance to really adopt those tokens also for payments. And so I hope we can at least over, let's say, the next 1 or 2 years, at least triple the market cap of euro stablecoins overall.
And is EURC a strategic focus for Circle? Because obviously you have USDC, who's the absolute winner. What are your leadership's thoughts on URC specifically, or are they more in like, let's wait and see this MiCA situation before we start heavily investing into it and shifting our focus on it?
No, Circle from top to the bottom is committed to EURC. I would say that the wait and see approach was probably one that was ahead of MiCA, was one that was a little bit stronger, just because everyone wanted to wait. Okay, let's get first the license, let's then onshore EURC issuance to the EU. That's what we have done now. So if you interact with EURC today, it's fully onshore to the EU. It's 100% issued out of our regulated French entity. And it's also 100% reserved out of that French entity. And so we wanted to get that done first, because that's the key piece of the puzzle in order to now grow it. And that's what we have been doing since. It's been working pretty well, to be frank. We've been growing EUROC supply already more than 50% over the last 2 months. We see significant traction. It was launched on the Base blockchain, for example, where there is now very cool FX use cases emerging, where you can just trade the dollar against the euro on chain via DeFi FX pools. Super cool. So we see a ton of traction there. We see traction with centralized crypto capital markets players like exchanges and others. And we see, as mentioned earlier, also the interest now, the growing interest from traditional financial institutions, but also payments companies to look into these things and consider payments use cases built on stablecoins.
That's super exciting. What is the market cap now?
I think as of today, we're around 56 million or so. So it doesn't sound much in comparison to the $1 billion US dollar stablecoins.
But in absolute terms, it's grown quite a lot.
It's been growing. It's been growing, and I think we will continue to see that growing.
Great. Just a reminder for the participants, you can ask questions through the Q&A button. So please start posting those, and while we wait for those, I'll ask Patrick another question. What does the European Central Bank think about all these stablecoin action? They've been observing, I mean, obviously it's a big part of the financial tissue here. So what are you hearing, and what's the view there?
At the end of the day, now that those stablecoins, which are actually called, legally speaking, e-money tokens under EU law, now that they're regulated in the EU, at the end of the day, I believe that the ECB just looks at them as another form of private money. We had private money in the past, bank deposits, e-money in the EU, so your PayPal balances, for example. And now there's just another form, which is tokenized, and which is called e-money token, right? And at the end of the day, I think the majority of money in circulation was always privately issued, be it by banks or be it by e-money institutions. And if you look at also the ECB in the context of the digital euro discussions, it's clearly no one in the ECB is trying to somehow replace privately issued money with CBDCs. That's not an objective of the ECB, right? So I think they look at e-money tokens in a neutral fashion. They treat it just as another form of money. And actually, I think while we see stablecoins grow, in parallel to that, I think we will also see the realization grow in those monetary institutions, but also in political bodies, that stablecoins can be a powerful vehicle to expand the power and the usage of the euro currency itself. The first time that the
Bretton Woods moment of the euro, basically.
Yeah, the first time that the ECB looked at that was, I think, 2 years ago. The ECB has a yearly report called the International Role of the Euro. And the objective of the ECB is to position the euro as a globally important currency and to improve those metrics across the board. And that was the first time when they looked at the very low usage of euro stablecoins and said, if that market continues to grow as it has been growing in the past, that could, in the future, be an important topic for us. And so I think strategically speaking, as the stablecoin market grows overall, we will also see more and more political support for euro stablecoins in the EU, just because it's an important lever for the power and the importance and the adoption of the euro as a currency overall.
Yeah, so it's basically stablecoins helping the euro find its use case after all these years. Definitely super interesting to watch. Okay, we have a couple of questions from the audience. The first one is, MiCA levels the field in our 30 or so EEM markets, but are we giving other regions an edge by moving first, so to speak? Are meeting East and Asian CASPs subject to the same standards? That's a very relevant question because we definitely have seen the massive exodus into the Emirates in the past 2 years. So I guess the question is, does that give us an edge, or does that make us lose competitiveness?
I think, and I hope the former, because the entire industry, if you have worked as you and me in the industry, has been calling for regulatory clarity for years now, right? And it has always been an objective, especially here in the EU, that we create that regulatory framework that is harmonized across the EU. I've spoken to dozens and dozens of German or French crypto founders, for example, and in the past they had an exchange business or a custody business, and it was super complicated and complex to scale that across different EU countries. So they were always kind of limited in their operations to one single country. And therefore, it was very, very hard to catch up with the competition on the global level in the US or Asia. And so I would rather see MiCA as an opportunity from a business perspective. It is important, obviously, that it is implemented in a practical way. It is important that it is seen as the beginning of the road, and that the industry, together with the supervisors, make sure that all those rules will also be practical in nature and can be implemented, and don't create an excessive regulatory burden where small startups, for example, are no longer able to comply.
Yeah.
That would be the worst case scenario, obviously. But I think so far the interests are really aligned across industry, across supervisors, across policymakers, to make that MiCA framework, that European crypto landscape, a success. And at the end of the day, we're all working towards that. And we'll see in a couple of years, we'll look back at the market and we'll be able to tell.
Yeah, but I think the whole industry is slowly coming to the conclusion that regulation is no longer a feature, but a requirement. So it's really a matter of time. We have another question. What are the weaknesses of MiCA from the perspectives of a stablecoin issuer? What can these regulations do better? That you're in it completely. Maybe you can give us
There's quite a few things that I think can be done in a better way in terms of prudential requirements, for example. And so when it comes to where the reserve assets should be held and how they should be managed, I think there's quite a few things that further iterations can improve upon. So limits, for example, for certain financial instruments, I think restrict the issuers to some degree and should be amended. And as mentioned earlier, as with any other EU regulation, it's the first adopted law, as has been the case with e-money or with payments or with asset management rules. But then over time, in the next couple of years, it will also be further improved. We will see an interim MiCA review already next year. We will see the final MiCA review in 2027. And if needed, the EU Commission will actually propose changes or additions to MiCA. So I think on the reserve side, there might be some improvements. I also think when it comes to the more protectionist measures within MiCA, for example, the issuance caps based on real-world payments of non-EU currency tokens, I think that's something that wasn't really warranted, because there's sufficient place in MiCA to kind of react in case there's a risk to monetary sovereignty. So that's another part I would mention. And then ultimately, last but not least, I think what MiCA also needs to implement in its next iteration is some kind of equivalent regime or regulatory recognition of licenses in other major financial jurisdictions. So for example, if a stablecoin issuer is licensed and regulated in the US, there should be some kind of fast track procedure or equivalence regime that would allow these issuers to also operate in the EU, and vice versa, right? Those issuers that are regulated in the EU should be allowed to operate elsewhere. I think that would make the life and the operations and the scalability of global issuers that are compliant and are regulated way, way easier.
Okay. We have so many questions. Sorry, we're not going to have time to answer all of them, so I kind of have to select them per topic. There's one that's actually quite interesting. There was some disclosure that MiCA only aims to regulate euro-denominated stablecoins, not all stablecoins, whatever currency they reference, or to the EU public. What are your thoughts?
It's not the currency that matters when it comes to what should be regulated by MiCA. It's really the question of what is being offered to the EU public. What is like, if you, for example, have an EU startup and you want to build a US dollar stablecoin or a Japanese yen stablecoin or a Swedish krona stablecoin, you need to get that regulated in the same way. There is not an exemption. I would say the only piece that is crystal clear for Euro stablecoins and to some extent an extraterritorial impact of MiCA is that if you build a Euro stablecoin, it doesn't really matter whether you are here in the EU or you're in like other parts of the world. Even if you build a Euro stablecoins in South Africa, you will be treated as offering that stablecoin to the EU public. And so you need to seek EU regulation. I think that's an important part that sometimes gets missed.
Got it. And there's two more questions that I really want you to answer. So you have 1 minute per question since we need to hard stop at 45. So there's a question on CBDCs and how does MiCA account for them, and like what's the impact of MiCA on CBDCs?
That's a tough one to cover in 1 minute or less, but I give you my TLDR. I think CBDCs are really something distinct from MiCA and different from MiCA. So especially in the European Union, or to be more precise, in the Eurozone, the digital euro that the ECB is currently contemplating and working on doesn't really have anything to do with blockchain. It's not going to be a token that ultimately is issued by the ECB on a public blockchain as any other stablecoin that we know. So I wouldn't really see it in the context of MiCA.
Got it. Interesting. And the last question, and it's the $1 million question. Who is going to win the race for the best euro-denominated stablecoin besides Circles?
Yeah, I mean, I'm obviously biased here on that front. Let me put it this way.
Do you think it's going to be, okay, to put it in another way, do you think it's going to be URC and everyone else irrelevant? Or do you think there's going to be like a few of those that are going to beef up in the next couple of months and come up strong?
No, I think there will be competition. There will be a lot of supply. We've seen a lot of actors entering the market. I don't necessarily think that we'll have dozens and dozens of relevant Euro stablecoins. I'm personally not a believer in that, just because the network effects are so important in the stablecoin business. But I do believe that we will see competition and that we will see a range of important and widely adopted Euro stablecoins. Ultimately, what matters most, I think, in the stablecoin market is how you create trust, transparency, and compliance, how you build the best product from a technology point of view, that people are easy to use it, easy to bridge it. And then last but not least, from a business and distribution perspective, how do you build network effects? Network effects are really the one and the single most important aspect for stablecoin growth. And I mean, we're working on all those fronts, trying to do our best every day. The market will tell, but I mean, I'm biased. URC, obviously, to the moon.
Great. I think those were the perfect closing remarks. Patrick, thank you very much for your insights. As a reminder, this session is recorded and it's going to be posted on the Crypto Valley Association's YouTube channels. So stay tuned for that. Patrick, thank you very much. And yeah, go Circle.
Thanks, Denitza.
Bye, everyone. Bye. Thanks for joining. Bye.